You ever wonder how celebrities can buy $20 million mansions, fly private, and still pay less in taxes than you? Well, they've got accountants, lawyers, and a lot of LLCs. From Beyoncé to Bezos, here's how the ultra-rich legally avoid taxes, and why it's not just about loopholes, it's a whole lifestyle. Step 1, don't just be a celebrity, become a corporation. Most A-listers don't get paid in their own name. Instead, they run everything through a business they own, usually an LLC, S-Corp, or trust. So, when Rihanna signs a multi-million-dollar deal, that check doesn't go to Rihanna the person. It goes to Roraj Trade LLC, the company behind her image, her music, and Fenty. Same with Beyoncé. She's not just Bey. She's the CEO of Parkwood Entertainment, which owns her music, her tours, her Ivy Park collabs, and now her new beauty brand Secret. And here's where the tax magic happens. When you run everything through a business, you can deduct nearly every cost that supports your brand. That means hair, makeup, flights, glam squads, hotel suites, assistants, stylists, meals, and yes, even press events can all be considered ordinary and necessary business expenses. So when Beyoncé showed up at Ulta Beauty for that Secret drop, that wasn't just a serve for the Bayhive. That was a fully deductible workday. Her glam equals a tax deduction, her transportation equals a tax deduction, her stylists and media team equals a tax deduction, even the social media team filming behind-the-scenes content for Secret, you guessed it, another deduction. Now imagine doing this for every single tour date, photo shoot, brand deal, and red carpet. When the IRS sees Beyoncé's tax return, they're not just looking at income, they're looking at an entire operation. And because all of that flows through her business, not her personal name, she has way more control over how much she actually pays in taxes. This is why the rich don't just spend big, they spend strategically. Because when your brand is your business, even a quick stop at Ulta can shave thousands off your tax bill. Let's talk about how Cardi turned a fast fashion collab into a full-blown tax strategy. Her Fashion Nova partnership isn't just a brand deal. It's a textbook example of business structuring done right. Cardi didn't just get paid to wear the clothes, she built her own branded capsule collections, promoted them on her socials, and showed up to launch events as if they were red carpets. All of it. Every photo, every appearance, every lash extension becomes a deductible expense, because the launch wasn't just marketing, it was work. And through her LLC, Wash Pop and Inc., Cardi can deduct everything tied to that campaign. Wardrobe stylists, content creation teams, behind-the-scenes photographers, car service to the launch party, venue fees, even her custom-designed nails. Yes, those count when they're part of her brand image. And the genius doesn't stop there. Cardi owns the content. That means she can repurpose those same Fashion Nova posts for Instagram ads, music video styling, cross-promotion, merch inspiration, and future brand deals. Each repurpose equals ongoing marketing value from a single set of expenses, and more reasons to write them off. And because Fashion Nova sales were processed through a revenue share model, Cardi's business didn't just spend it earned. Translation: Cardi promotes, her LLC earns a cut of sales. She deducts all campaign costs and only pays taxes on what's left. So next time you see Cardi in a custom fit, flexing a new drop, just know she's not just promoting fashion. She's building a business with built-in tax breaks. That's not just hustle, that's a tax-optimized empire. When Kim Kardashian launched Skims, she wasn't just selling shapewear. She was building a multi-billion-dollar brand, housed under KKW Holdings LLC, and trust, that wasn't an accident. Because when you own the business and your face is the brand, every photo shoot, every promo trip, every perfectly placed Instagram story becomes a strategic expense. Here's how the write-offs roll in. Her warehouse? It's not just for inventory, it's a shoot location, podcast backdrop, and press event space. Her glam team? Deductible. They're part of maintaining a visual brand standard. Private jet travel for product launches? Deductible if she's flying for work, which, in her case, is all the time. Even the viral Skims campaigns that take over social media, production budgets, ad teams, influencer payments, all deductible. And it doesn't stop there. Kim also uses her personal real estate to fuel the brand. She's filmed SKKN content, Skims ads, and Hulu segments from her $60 million Hidden Hills estate, which means her office wing home studio setups, property maintenance for those spaces can all be partially deducted. And don't forget the big one, image licensing. Kim doesn't just show up for Skims, she licenses her name, face, and body to the brand via her LLC. That means Skims, the company, pays Kim's LLC for the right to use her image, so she gets paid and deducts the cost on the business side. It's literally a money loop, one that keeps the cash in the family and trims the tax bill. So while the internet sees Kim in a bodysuit and stilettos, the IRS sees a high-functioning corporate structure operating across multiple entities: glam, deducted jets, deducted warehouses, filming locations, facial licensing, all deducted. In Kardashian land, the shapewear isn't the only thing getting trimmed, so is the tax bill. If you think charity is just about giving back, you haven't seen how the rich give forward, right into their own foundations. Because yes, many celebrities are generous, but they're also strategic. Meet the tax strategy that blends philanthropy with financial finesse. Donate, deduct, direct. Let's start with the queen of calculated giving, Oprah Winfrey. Oprah has donated over $400 million throughout her career, especially to education and equity initiatives. But how she gives matters just as much as where the money goes. She doesn't just write checks to random nonprofits. She gives to causes that align with her brand, often through her own foundation, the Oprah Winfrey Foundation, a registered 501c3. Here's why that's powerful. The donation is tax deductible. The foundation is run by her team. The programs funded often boost her public brand and legacy. Let's dig into other notable philanthro-tacticians. Taylor Swift. She donates millions, quietly and loudly, but much of it goes through sponsored events or school donations during her tours, which means travel, press, and PR around her charitable efforts. Tax deductible under tour promotion or marketing, Leonardo DiCaprio. Leo runs the Leonardo DiCaprio Foundation, focused on climate change. He's given over $100 million in grants, but also hosts star-studded galas that double as both fundraisers and tax-deductible events. He donates art, buys it back, and hosts it all under a charitable veil. Reese Witherspoon. She's donated millions, but also partnered her giving with Hello Sunshine, her media company. For example, giving to women's education programs while releasing a women empowerment film or podcast aren't brand synergy and deductions. So yes, celebs give back, but don't get it twisted. Charity is heartfelt, sure, but it's also a high-level money move. Because when you control the foundation, the events, the narrative, and the write-offs, you're not just changing lives, you're changing tax brackets. Lastly, the no-tax states. The zip code flex. When you're making tens of millions of dollars a year, where you live can make a huge difference in how much you keep. And celebs aren't just picking cities for the vibes, they're picking states that won't tax their income at all. California, taxes can go up to 13.3%. New York, almost 10%. But states like Florida, Texas, Tennessee, and Wyoming, 0. That's right, no state income tax. Joe Rogan. When Rogan signed his $100 million Spotify deal, he immediately left California for Austin, Texas. That move alone likely saved him over $13 million in state taxes. And he took the whole podcast operation with him. Shakira caught heat from Spain for tax evasion. So what did she do? She moved to Miami not just for the palm trees, but because Florida doesn't tax income. Now she's got sunshine, beachfront glam, and a lighter tax bill. Tom Brady spent years making bank in Florida while playing for the Bucks, then bought real estate in Tennessee and Texas, both income tax-free states. He's not just goating on the field, he's saving millions off it. Jeffree Star. Let's be honest, this one shocked people. The YouTuber and beauty mogul left LA and built a yak ranch in Wyoming. But don't let the country aesthetic fool you. Wyoming has no income tax, and Jeffree moved all his business operations there. It's giving glam with a strategic tax overlay. So yes, celebrities are working hard, but they're also working smart. Because when you get paid through an LLC, deduct the glam buy homes with depreciation perks, start foundations that double as legacy projects, and relocate to states that don't tax your income, you're not just building wealth, you're engineering it. And the best part? Almost everything they do is perfectly legal. Which celeb tax move shocked you most? Drop a comment, like, and subscribe for more wild stories about money, fame, and strategy.